And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family. Welcome to the Market Prep. It is Tuesday, February the 21st, almost through February already. Hard to believe. My name is John Hoagland. Thanks for trusting me with your time. As always, our focus here is on seeking accurate context, good risk management, and remaining patient in our trading. So we've got things on the run a little bit here this morning. There have been some pretty serious changes in uncertainties in the markets over the last 24 hours. One of the things that I'm focusing on this morning is the fact that yesterday was a non-settlement day. It always freaks me out. There's no volume data, there's no open interest data until tomorrow morning. So we're going to be kind of flying blind as far as that is concerned. We've got some important economic information, semi-important, 8:45 this morning, Central Time. The PMI composite preliminary is due out 10 o'clock, existing home sales. It's nothing hugely impactful, but the market is going to be like a little bit of a sore thumb today, I think, or a sore toe. When you have a sore toe, inevitably you're going to bang it on something. We've got U.S. stocks heading lower as the European PMIs have dragged the Eurozone stocks lower. Traders and investors take a guarded stance on the Home Depot missing on revenues and also warning on revenues for 2023. Walmart has beat expectations, but also adding to a somber mood, Russia has suspended participation in the START treaty. That is the agreement between Washington and Moscow about nuclear weapons. They have now suspended their participation in it. They're no longer going to be allowing us to inspect what they have. So that's been steady for about 20 years. This is unnerving, to say the least, for the world and at least for traders. So we've got some new uncertainties, and it is certainly showing in the markets, and it is certainly showing in the VIX, which is up about 11.5% this morning, up above 22 at 22.34. Last I checked, we've got crude prices pretty much idling. We won't have the API this afternoon. The API will be tomorrow, and the EIA will be on Thursday due to the holiday on Monday. These Monday holidays always freak me out again because of the lack of settlement day. So we've got VIX up, we know, about 11.5% at 22.34. The dollar index at its monthly high, 104.02. And the yield on the 10-year up almost to 4. It's up at 3.88%. So the rates continue to creep higher, increasing the probability, or at least the fear of the probability, of recession. So we've got a whole bunch of issues that traders and investors are dealing with today. It's going to be, I think, a very interesting and challenging trading day. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. We are going to be having Make Hoag Money today right after the market prep here. I just put the link in so you can join us on the Zoom meeting. You can watch it on YouTube, but if you want to vote for the trades, come to the YouTube and join us there. Today we'll have the coach's playbook will be today about 11:30, and then we'll have the market reflection, and that's going to be it for the week as far as events on YouTube or in any of the Zoom meetings. We're going to an offsite. We're going to be talking about all of you and how we can continue to improve your experience here with Top Step, and we're looking forward to bringing you lots of good things coming soon. I know we're making some changes to the morning broadcast relatively soon. We're working on getting some things done so that we can improve that for you all, and I look forward to spending maybe even a little bit more time with all of you. So again, we've got an interesting trading day. We're going to get into things pretty quick here this morning. I got to say good morning to everyone. Happy Synthetic Monday, Shaw, to you. First in the room, Shaw wins the prize this morning. Good morning, my brother Rick. Randolph, love you. Steven, good morning. The Rooster. Dimitar, Jules, George, Lacey's right in the middle of the front room here, just laying down and relaxing, enjoying being the center of the universe. Good morning, Scott Saw, and he conquered. Jason, good morning. Don, Charles, Robert, Jason Lewis, good to see you. Ainsley, good morning. Fred, talking about what I was just talking about, how non-settlement days are a little bit screwy. They tend to freak me out a little bit. Is there a gap or isn't there? We're going to discuss that in just a couple of minutes when we get to the charts, Fred. Bill, Naztic, good morning. Rob T, Alejandro, Pablo, Zarena, Nisa, Dan, good to see you. Caesar, Will, looks like an exciting day for sure, right? Shy Tran, German, good morning. Dimitar. Rusty Golfer, my spirit animal. DA, VJ, Dr. VJ, it's good to see you. Pete, JT, good morning. Sarah Hall, prayers and love as always to you as well. Good morning, Ainsley. And Glenn Randolph, they're saying good morning to you, Rick. Good morning, Glenn. If this is your first trip to the Market Prep, we're glad you're here. If you're the first time you're saying good morning, thank you for saying good morning. We always like to know that you're here and that you're ready for the trading day. And we are going to, again, jump into the charts pretty quickly here. This is the daily in the S&Ps. What do we have ahead of us? Well, I've been, hoping that we were going to be able to maintain price in this area of balance. We broke out below this trend line, but we left a lot of excess on the daily bar on Friday. Well, now we are looking like we are going to open with a gap below that level. Is it a gap? Is it not a gap? We have the settlement price still from Friday. We don't have any new information as far as volume and open interest is concerned. We've got some downside trend going here in the medium to short time frame. What's going to happen today? Well, there's our settlement from Friday. We've got a whole lot of shorter time frame shorts in this market, and they may be positioned the right way today. Is it a gap from yesterday? Yes. Was there any participation yesterday? No. Is it more important that we're gapping below Friday? Absolutely. 100% very important that if we open with this gap and can't close this gap, we may find longer time frame traders adjusting inventory to the short side, either getting out of longs or getting into shorts. You got to remember that the longer time frame traders aren't out there trading naked positions. They're positioned with hedges, but they're probably going to adjust their hedges should something change in the marketplace, which is a distinct possibility today. The fear factor is in. We've got a big jump in VIX. That's the fear factor. So Friday's low is going to be really pivotal for us today. We've got our weekly kickoff down at 4,000. It's a point of control basically. And we've got some space down to that level if we continue to accept lower pricing below last week's low. Here's last week's low again. Looking like we're going to be opening with a gap. It's going to be an interesting make old money this morning. Let's see if we can get on the right side here. So what else are we looking at? Well, let's take a look at the TPO chart. It's not going to really help us much from yesterday's activity. It was a normal variation trading day. The initial balance was the high of the session, abbreviated session. It's the low here that I'm more interested in looking at, and that's where we are right now. The market opened here. It's just continued to push lower and lower throughout the evening. We have a weak low in the overnight now. Again, if we can't close this gap relatively early, we're going to probably be looking for opportunities on the short side. Lots of uncertainties, lots of questions, lots going on in the world. Markets don't like uncertainty. So our resilient traders have been unable to maintain price inside balance. We broke out on this trend line on Friday. Continuation possible today. That excess low we put on Friday had me hopeful that these resilient investors would find the opportunity to continue price higher. Unfortunately, things in the world have gotten in the way. All right, let's take a look at crude oil now. Crude is relatively uninteresting this morning. Not a real big range in the overnight, not a real big range outside of yesterday's range. Again, no volume or open interest information leaves us blind as far as it comes with that. Where is price? Well, it's pretty centrally located inside last week's range and certainly inside the weekly kickoff high and low. We are in short time frame control until we're not. The uncertainties could certainly bleed into crude oil today if something weird happens. That can change us from short time frame control to longer time frame control in a heartbeat. But until that happens, we've got to be looking for opportunities, looking for short time frame levels with which to look for executions. We didn't close the gap yesterday. Yesterday was actually a full trading day in crude oil, but very low volume, of course. Where are we today? Well, we're inside range. We're inside value. We don't really have much as far as overnight inventory is concerned. So we're going to chill here. We're going to be very patient today, looking for opportunities in crude oil. Now, opening in range and in value, as we discussed yesterday during the group coaching session, makes me feel as though I can wait a little bit. I can look for better trade locations as the day goes on, and I firmly believe that is true for crude oil today until it isn't, right? So, we've got the point of control up here from yesterday, which is very close to the extreme of the range. It's kind of a normal variation extreme day with the volume point of control all the way up there near the value high from yesterday. We stopped there already. What about the lows? Well, overnight low relatively close to the point of control from Friday. So point of control from Friday, point of control from yesterday, interesting levels for an execution. Stay patient. Here's the TPO chart from yesterday. Normal variation trading day. Extreme, we've got the point of control, the TPO point of control in the upper half of the profile. And of course, we know that the volume profile point of control is all the way up at the high here. So normal variation, extreme day to the upside, excess to the downside. Initial balance high, the high of the regular trading hour session range. Are we getting a lot of information from this? No, not really. Friday we had a relatively even bell curve that says that price may go looking for different areas for participation, for facilitation of trade, which it did yesterday. But of course we know that the volume was going to be very, very small because of the holiday. Well, we've got naked point of control lower here. We've got another prominent naked point of control here. Prominent naked point of control, prominent naked point of control. Those will be more levels that I'll be looking for opportunities for us today. So we've got some time to wait and some time to be patient. Take a look at the Nasdaq. Here's the daily. So again, breaking out below this trend line last week, leaving excess on Friday. Holiday yesterday, non-settlement day, always freaks me out. Look at how low the volume was. Just nothing. Now we're in the same situation as the S&Ps. Are we going to open with a gap from Friday? Not worried about the gap from Monday so much. The gap from Friday, to me, is much more important. If we open below last week's low with that gap from Friday, it's going to kind of incite me to think maybe we're going to start looking for facilitation at lower prices, acceptance of lower pricing. It's a breakout below the area of balance we've been in for about 3 weeks in both of those markets. So here's, settlement still all the way back up here. We know we're going to have a gap below yesterday's range. Does it really matter? Here's the gap I'm more interested in from Friday, when the participants were here, to when the participants are going to be here today. We open with this gap and can't close this gap. We'll look for continuation to the downside. In both the S&P and the Nasdaq, the possibility of a value area special situation play does exist. But of course, we know that that's not possible without first getting a gap close. It's going to be an interesting make-hole money. Here's the TPO chart from yesterday in the Nasdaq. Normal variation trading day, neutral. IB high is the high of the regular trading hour session range. You look where we are now. We are creating a gap between Friday, last week's low, and price. We accept below here. We look to continue a move to the downside. Going back to the 30-minute chart, no real overnight inventory yesterday, but we have some considerable overnight inventory to the short side today. Could be enough to bring us to a better trade location for a short. A caveat to all of this in these equities, in all of these markets, when it's a non-settlement day on Monday, it freaks me out because I don't have everything I'm looking for. Volume, open interest, and a settlement from the previous day's session. Here's gold. We had the dollar looking higher, still looking a little bit higher here this morning. We had the break of the upside move, continuation to the downside, bear flag, continuation to the downside, little area of rest here, a little downside digestion going on. The short time frame structure is still to the downside. We had that excess low on Friday that still remains. The U.S. dollar is a little higher, but we're not testing the low of Friday's excess low on the daily chart. Here's the 30. Overnight inventory was short. It's already reconciling here early in the session. Been open for 40 minutes. And no gap close. That would be interesting for me. But I'm thinking that this upside move is more about an overnight inventory adjustment. Short time frame got too short. They got nervous. They're bailing out. If we can't close the gap and we set some sort of day time frame structure in here, I'll look for that to look for continuation, possibly to the downside, as long as we don't re-accept inside Monday's range. And again, very low volume. Freaks me out all the time. Morning, JD. Morning, Philip. Trading Research. Vince, good morning. So here's yesterday. Week high, week low, opening with a gap. Some possible repair probable here from Friday. We get down below this level here, then I see us moving down to an assumed point of control in this area of distribution here. Right now, it seems as though the market is adjusting overnight inventory. If it does that and sets up some sort of structure before closing the gap, maybe even on a gap close, could be an interesting opportunity for us. We may see this market continue the move to the downside. Trying to stay patient. The range from Monday is sort of moot. There's such little volume. I'm focusing more on the range from Friday, and we're inside range and inside value from Friday's session. Patience. To the euro. The euro, I seem more likely being affected by the dollar here. This falling balance that we're in here remains. We still have the Friday excess on the low again. Suggesting too cheap down there, at least for Friday. We'll keep your eye on the U.S. dollar, of course, with no volume, No open interest information. Let's move on to the 30-minute chart. Overnight inventory short, perhaps looking for a reconciliation there now, but again, very similar to gold. Potential repair from Friday's session, inside value and range from Friday. There's more focusing on the information from Friday than Monday because at least Friday was a whole trading day. Yesterday was a whole trading day as well, but very low volume, very low participation. The longer time frame traders were not involved in this yesterday, so we're only getting partial information from Friday. So inside range and value from Friday, I'm going to try and stay patient, look for better trade locations on the extremes as the day goes on. Here's the TPO chart. Sorry, I didn't do that. So yesterday, normal variation, IB low, neutral trading day, very low participation, very low volume. Here we are. We're in an area of potential repair in the euro. Point of control here, point of control here. This could, bring forth a rotational day to repair this profile from Friday. So rates continue to creep higher. We've got a pretty good downside structure here. No real break in that structure. A little excess on Friday off the Friday low. We're, I think, looking to continue to sell strength here. I think that the writing's kind of on the wall. Rates are moving higher. It's already in the market in some regards. Take a look at the 30 here. Overnight inventory is very short. Even the Sunday night inventory is continuing to get paid. Overnight inventory very short. What does this look like as far as Friday's range was a double distribution? Low single TPO is here. We've opened it now, well, really kind of below the assumed point of control down here. If we can't get back into this repair area, I'm looking for this market to continue lower. Watch, of course, rates. And then we'll take a quick look at the natural gas. So yesterday, very indecisive. We could expect that. It was low volume. It was a holiday. Looking like we're going to see some continuation. We had balance here. We broke out on Friday of that area of balance. Looking to see continuation below Friday's low. Again, no volume and open interest information. Leaves me a little blind. But we've opened with a gap. We are driving away from the gap. I'm not going to be trying to step in front of this market at all. I've got the weekly kickoff low here, actually even lower than this. 189. So I think that there's a lot of space down below. Right about there. Is that on the right spot here in the daily? Yes. 189. I think there's a lot of space below this market. It seems kind of strange to say, but natural gas below $2. Could it be? Doesn't look like it on my gas bill, I'll tell you that much. So gap driving lower. Big excess high on Friday on that breakout. Continuation to the downside, value overlapping to lower, range overlapping to lower, gap lower, driving lower. I'm not going to step in front of this market. I think it's going to be a very challenging day in all of these markets, as they always are, especially after a non-trend day. It just makes me crazy. HPAC, the VIX, is up 12% right now. It's up at 2241 last I can see here. A lot of fear in the market. In the natural gas, I moved to April yesterday, Fred. I should have mentioned that. I did mention it yesterday, but April certainly has more volume in the natural gas. It started yesterday. It's an early roll. So definitely, if you're going to be trading the natural gas today, you want to be trading the April contract. Romper room, come on. JT, I like the 40.43 to 33 for a bear trap. Bounce off of there and then continue lower. We'll keep an eye on that. If you're coming to make Hogue money, make sure you bring that. We got a little bit of time and space before we get down there, but it certainly looks like the market is heading in that direction, at least right now. So, all right. Once again, last announcement of this. Today is it. We won't be having the market prep or the market reflection or make Hogue money or group coaching for the rest of the week. We are going to a company offsite, and I will miss you all. I'm going to miss the markets. I'm going to miss you, and things will go back to normal on Monday. The support team will still be in play. They are going to be there for you if you have any problems. Don't worry about that. But as far as the production and the forecast recap, all of those things, the prep and reflection, I should say, this is going to be it for the week. So the last time I will see you this week will be on the recap today. Make sure you join us for Coach's Playbook at 11:30, and I will see you in just a few minutes for Make Hogue Money. Let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today and every day. Please say a big prayer for world peace. We need it. We need the prayers for world peace. And I will look forward to seeing you shortly. Get out there and profit today if I don't see you, and trade well.